Ladies and gentlemen, thank you so much for standing by. Welcome to the Isle of Capri Casino's Fiscal Year 2015 First Quarter Conference Call. At this time, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session with analysts. Instructions will be given at that time. As a reminder, today's conference is being recorded and will be made available for replay. I will now turn the call over to Jill Alexander.
Good morning. All statements made during this call that relate to future results and events are forward-looking statements that are based on our current expectations. Actual results and events could differ materially from those projected in the forward-looking statements because of risks and uncertainties which are discussed in our annual and quarterly SEC filings and in the cautionary statement contained in our press release. We assume no obligation to update our forward-looking statements. We are joined on the call today by Virginia McDowell, President and Chief Executive Officer, Eric Hausler, Chief Financial Officer, and Arnold Block, Chief Operating Officer. With that, I'll turn the call over to Virginia.
Thank you, Jill. Good morning, everybody. During my opening comments on our year-end conference call 3 months ago, I noted that Isle was engaged in a disciplined balancing act based on the new reality of regional gaming. Our team was focused on simultaneously reducing costs through operational efficiencies and improving the customer experience, both necessary to improve shareholder value in an environment where the top line remains challenged. For nearly a year, we have diligently pursued a profit improvement plan that continues to pay dividends as operating smarter becomes more ingrained in our culture. At the same time, however, we've been laying the foundation for building even stronger relationships with our customers by looking at nearly all our marketing programs with a fresh set of eyes and a results-driven perspective. We've talked about some of the changes, such as the launch of the second phase of our fan club customer loyalty and rewards program and our emphasis on net promoter scores on our past conference calls. While much of the organization was focused on finding ways to right-size our cost structure based on the current operating environment, we were also taking the time to reinvent our business with the direct help of our customers. Our results this quarter show the impact of the changes we've made, and we plan to launch additional new programs and exciting initiatives over the next couple of months that we'll discuss in more detail on our next quarterly call. We are pleased that nearly 3/4 of our properties were paid bonuses based on their net promoter scores in the first quarter, which further validates that our customers approve of our new direction, and they voted with their wallets as well, as evidenced by the success of the Summer of Seafood promotion that I discussed last quarter. While only 3 properties participated in our beta launch in their respective buffets, the promotion at these sites resulted in an increase in cash covers, cash revenues, and casino revenues during the target months. The feedback from our customers was so positive, we're launching the next version of the promotion in the fall, with even more fun and more food and more fanfare, and 11 properties have already added it to their fall marketing calendars. Don't get me wrong, times are still tough and our world has changed. But the Isle team is determined that we will change right along with it, and we believe we're up to the challenge. And with that, please welcome Eric Hausler to the hot seat.
Thank you, Virginia. Good morning, everyone. As we outlined in the press release, net revenues were $242 million, an increase from $238 million in the prior year. Excluding Nemacolin, which was open for only 1 month of last year's quarter, net revenues were $233 million relative to $235 million. Consolidated adjusted EBITDA was $43.7 million, up 4.3%. That is compared to $41.9 million in the prior year quarter. Excluding Nemacolin, adjusted EBITDA increased 3.9% year over year. There were a few items in the quarter that impacted our earnings and are excluded from consolidated adjusted EBITDA, which we highlighted in the press release. Notably, these include $2.3 million in severance expense related to the restructuring of our corporate office and $1 million in expenses related to the referendum in Colorado. In the prior year, we had a $1 million gain from the sale of our corporate airplane. Our EBITDA increase was driven primarily by better results from our property in Lula, Mississippi, as well as our properties in Bettendorf and Waterloo, Iowa. Additionally, all 4 properties in Missouri reported increased EBITDA year over year. Our property in Pompano continued to be a solid performer with a 9% EBITDA gain. Excluding non-recurring items, corporate and development expense was down 10.7% year over year. Interest expense was also lower year over year, primarily as a result of lower borrowings on our credit facility. Adjusted income per share, adding back severance in the Colorado referendum expense, was 2 cents per share for the quarter relative to an adjusted loss of 7 cents per share in the prior year. On a GAAP basis, we reported a loss of 6 cents per share on a continuing basis relative to a loss of 14 cents per share in the prior year. During the quarter, we spent about $9 million in capital, almost all related to maintenance and equipment purchases. We expect to spend approximately $38 to $40 million in maintenance capital throughout the remainder of fiscal 15. At the end of the quarter, we had $1.06 billion in total debt. Our revolver balance was $55 million relative to approximately $65 million at the end of our fiscal fourth quarter. We also had $1 billion in bonds outstanding. Our leverage for covenant purposes was 6.3 times, and we had $125 million in available capacity on our revolver. At this time, we can open the call for questions.
Thank you. We will now begin the questions and answer portion of the call. If you would like to ask a question, please dial star 1. If you're using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star and then 2. At this time, we'll pause momentarily to assemble our roster. Our first question comes from Steve Wazinski of Stifel. Please go ahead.
Hey, good morning, guys. Virginia, I guess in the release you talked about you saw a 4% increase in retail play, and you also saw a decrease in some of your customers from your lower segments of your database. Can you just give a little bit more detail around that comment? And maybe is it something that has it gotten worse? Has it gotten better? Is it stabilizing? A little more color there would be helpful. Thanks.
I'm going to let Arnie answer that.
We've seen a little bit of deterioration and migration. Some of our efficiencies in our Fan Club 2.0 have caused a little bit of this, but really it's all wound up being more profitable, better EBITDA results. So we're not unhappy with the results and the strategy that we put out there.
Okay, gotcha. And then maybe Virginia, help us understand how you guys are thinking about Colorado at this point, and if something happens there, have you guys tried to figure out what the potential impact could look like, on your two properties there?
We're more focused at this point on the campaign to defeat the referendum. It is something that the Colorado properties are united in. We have a tremendous focus on making sure that we get the strategy of this right. We were very encouraged by what happened last Friday with the Denver School Board, which is the largest school board in the state, that basically said that they were not going to support the referendum. So we will just continue to work with our coalition and do everything that we can to defeat this going forward.
Okay, great. Thanks, guys.
Our next question is from Chad Beynon of Macquarie. Please go ahead.
Hi, good morning. Thanks for taking my question. First question for you, Eric. With regards to the 6.3 times leverage that you talked about, could you talk about a level of comfort that you're looking to reach that would maybe allow you to consider expanding the portfolio given some of the properties that are for sale in regional gaming at this point?
Well, I think we're always looking at we're opportunistic in the way we look at properties that are for sale. If we see something that makes sense and would add to free cash flow, and we could do it under our existing capacity, we would certainly consider it. I'm not sure there's necessarily a target for an acquisition standpoint that way. We've historically said we'd like to get to 5 times leverage. I think you can see we continue to be aggressive about reducing debt with our free cash flow, while also making prudent investments in our existing portfolio.
Okay, thanks. And then with regards to any property tax appeals that are outstanding, is there anything out there that could be meaningful from a cash standpoint going forward over the next 12 to 18 months?
I would say that, overall we continue to evaluate where we are paying property taxes and where it may be out of what would be the current market, but there's nothing we have guidance on at this point.
Okay, thanks. And the last one on Cape Girardeau, it looks like margins fell sequentially on kind of similar revenue as to what we saw last quarter, yet you mentioned retail play improved. Anything going on there that would prohibit you from getting margins back into the high teens or low 20s as we saw in your fiscal fourth quarter?
Most of it will be labor improvements and cost of goods sold. As Virginia mentioned, we had the seafood takeover promotion, and we're going to do a better job of controlling cost of goods at that property. And then we're attracting a larger Asian market, and our player development efforts are a lot better at that property going forward as well.
Okay, thanks, and congrats on the results.
Thank you.
Thank you.
Our next question is from Susan Berliner of J.P. Morgan. Please go ahead.
Hey guys, this is actually Wade Pontius on the phone for Sue. Just have a quick question on the two properties that are potentially under development. The first one being, I know you guys received approval to go ahead, or you submitted a proposal for a land-based property in Bettendorf, and I was just wondering if there's any update on that.
The permits are ready. We are still working with the city of Bettendorf and our nonprofit partner on finalizing our agreements with them. We are hopeful that we will get that done in the very near future because we would love to go to our board of directors and get approval for this project so that we can start prior to the winter and not start next spring.
Okay. And just the second question is just on Golden Nuggets property. Has there been any update on that in terms of it still being expected to open by year end?
I believe that's still the case.
Okay. That was all I had. Thank you.
Thank you.
Thanks.
This concludes our question and answer session. I'd like to turn the conference back over to Virginia McDowell for any closing remarks.
No, thank you very much. As I said, we've got some exciting stuff coming up that we're going to launch in the next quarter, and we look forward to talking to you in a few months. Have a great day.
To access the digital replay of this conference, you may dial 1-877-344-7529 or 1-412-317-0088, beginning approximately 1 hour from now. You will be prompted to enter a conference number, which will be 1005-1402. Again, that is 1005-1402. Please record your name and company when joining. The conference is now concluded. Thank you for attending today's presentation. You may now disconnect.